Welcome to the show. Let's talk to our very own Matt Brown. Morning to you, young Matt.
Good morning, happy Friday.
Yeah, happy Friday indeed, sir. Right, let's kick off with the headlines this morning. ECB and earnings drive stocks higher, onward and upward.
Onward and upward indeed. We had Mario Draghi in the ECB yesterday. Look, they're halving their bond buying programme. No surprises there. But there was a lack of kind of any hawkish statements. It felt dovish. The comments were, look, it's going to take 9 months for the reduction on the QE programme. In the interim, it's unlikely that the ECB are going to raise any rates. What does that mean? Well, the euro sold off on the back of that. That's pushing European stocks higher. FTSE's actually kind of lagging slightly, but a little bit of a push higher as well this morning. And some good numbers out from the US, the likes of Twitter, Google, Microsoft, all beating. Dow, DuPont Chemicals, which is a bellwether for the industrials out in the US as well. So look, the numbers for Q3, usually in the US, the Q3 numbers can be a little bit disappointing. It seems like they try and throw out or get out all the bad news in the Q3 before the end of the year to boost bumper Q4. But actually, the Q3 numbers out the US are strong and good, and this is more positive to justify why the US indices are grinding
at
higher.
23,000.
Incredible.
Okay, so let's look at a stock today. The Royal Bank of Scotland, we saw a stinker. City hammers Barclays after torrid results earlier this week. This was better news, right?
Yeah, better than expected. I mean, we saw bad numbers from Barclays, bad numbers from Lloyds, or the market interpreted those as bad numbers. So a Q3 beat for RBS, which is positive, but there's still this element of ongoing issues with the US and the Department of Justice that could affect their bottom line profits at the end of the year. So the market's a little bit cautious. They like the fact they've beaten this morning. The stock's only up about 1 or 2%, which is better than Barclays, as we saw yesterday, almost down 10%. So look, not a bad set of numbers for RBS, but as I say, there's still this overwhelming Department of Justice issue hanging over the RBS, and that could affect.
And the government still owns 71%.
Indeed.
Right, let's talk small caps. AIM one to watch today, making plaster smarter. Symphony Environmental. Dare I ask what they do?
Well, I've picked this one out. It's a positive story on a Friday. They've had a trading update. Now, this company manufactures biodegradable plastics. And this
it's
is going to
good plastic.
Good plastic. I mean, at a point when people were saying very soon there's going to be more plastic in the sea and the oceans around the world than there are fish. The scientists designed plastic to last forever, but didn't realise that it was going to be dumped everywhere. So from an environmental point of view, this is good. They're bringing biodegradable plastics to the industry, and this, for me personally, I think is going to be a growth industry in the years to come. So it's quite a small stock, 20 million market cap, but certainly in the right space moving forward for the future of the globe.
Understood. Let's move on to currencies. The FX rates, Great British Pound against US dollar, 130.84. Interest rate decisions next Thursday, and the Euro US dollar, 116.34. Seller for choice.
Yeah, seller for choice on the Euro. We were talking about this yesterday. I was bearish on the Euro ahead of the ECB decision. Pulled back from 118 down to near 116 handle now, and the pound really has dropped back in light of that, really, with a bit of dollar strength. Now we've got the GDP numbers due out from the US later on, Q3 prelim numbers. If we see a strong post there, that will be dollar positive, and I think the Euro, as you rightly say, is out of favour, and I'd be a seller.
It's quite strange in terms of technical analysis. There's some bearish formations on the Euro US dollar, and then ignore them at your peril, as the technicians would say.
And it's got a long way to go on the downside potentially, so
Absolutely.
there's a big gap there.
Right, let's talk broker upgrades, downgrades. Tate & Lyle, you got a sweet tooth this morning. The new recommendation, hold from a previous reduce. I don't know who's...
Kepler Chevron.
Okay.
There we are. So this is a stock that's really been out of favour. I mean, sugar and sweeteners aren't really kind of everyone's cup of tea, if you excuse the pun. But it's an interesting stock. I mean, it was trading about £8 a few years ago. It's now around the £6 level. Could be one of these takeover targets, really just putting it out there. When you look at consolidation in the sector, you look at Chinese growth as well, the sweetener and sugar industry, even the kind of food supplements, starch supplements, etc. that Tate & Lyle produce. it's one that's kind of gone off the radars and maybe seen as a little bit boring, not very exciting in this day and age, but keep an eye on it. What could be one for next year.
I used to trade that stock as a takeover stock 10 years ago. That's all I'll say on that. Right, let's talk about core number, £197. I was racking my brain. I don't know what that number is.
Yeah, I've picked this out. This is a survey done by Asda, the supermarket group, in fact. And they've looked at the UK and the average UK household discretionary spending per week. It's £197. Now that's been reduced of late by £1 or £2, so a couple of percentages off that big figure, but it's not much, and it stuck out as me as not being much. And in the recent survey, they've said out of 12 regions, 10 have seen a reduction in discretionary spending. Only London and Yorkshire actually.
But this is basically
stronger.
after all your bills.
Yeah, or after
does
your
that
bills,
include
income tax, food as well. This is how much you've got left in your pocket.
To go down the pub with.
To go down the pub, leisure spending, cinemas, whatever you want, even school books for the kids and things, per household. So, that's split between
So
two adults
£200
and
a
kids.
week, that sounds a huge amount of money
That
to
isn't
me.
much. And the thing that worries me is again, it's the move to credit and the bubbles there and cars. We've mentioned that quite a lot on the show. You can't save up and buy a car with £197 discretionary
But
spending.
you could pay that on a monthly.
Exactly.
Lease, right?
Exactly. So people are now looking at a monthly lease, and there's a bubble, forming there. So that's the big concern, and it's actually a key number it's a key bellwether of how the UK consumer is reacting with Christmas round the corner.
Well, the UK consumer, if he's got £200 a week to spend, he's never had it so good, right?
£200 doesn't go far in an inflationary environment, though.
But I've paid all my bills. This is my beer money.
Well, we'll see. We'll
We'll
see.
see.
I mean, at £5, you work out how many pints you can get for that.
Yeah, well, it depends what you drink, I guess.
True that.
Right, let's wrap up with the calendar, the economic calendar today. The US Q3 GDP, obviously the big number after Draghi yesterday, and the Baker Hughes rig count at 6 o'clock in US time.
GDP is the big number. It's one of the big numbers of the week now. We've got the ECB out of the way, so look out for that. And I think we might see a bit more dollar strength today.
Right, a couple of news headlines just to kick off with. In the Standard last night, Jonathan Preen, the consumer business editor, worst slump in house building in London since the 90s crash. Don't like to see headlines like that. And finally, don't be afraid of the interest rate boogeyman. Callum Pickering doing a piece of research, Berenberg's senior UK economist. So raising rates not necessarily a bad thing. We'll see that next Thursday whether Mr. Carney is a good or bad boyfriend, or a reliable or unreliable boyfriend. Final thoughts, Matt?
Again, as I say, GDP. I think we're going to end on a positive note. I think equity market's going to get a bit of a bump today, and then, as you rightly say, for next week, certainly for the UK, all eyes to the Bank of England.
Matt, thank you very much indeed.